Okay, welcome to Personal Finance. This is Unit 4 that we're going to be going over. What I'm going to do first, I'm just going to share my screen. All right. Okay, so just remember this lesson is being recorded for learning purposes. Classroom expectations, make sure you're following with the Nearpod lesson. You're using the chat tools respectfully and appropriately, and that you're responding to questions and instructions the first time. I did want to jump over just to the course real quick so you can run through it. Remember, I always post the recordings here to the announcement page. If you hit the plan button, we meet every Monday at 1:15, and then you have your assignments that are due that Friday. So we're coming up here, not much too longer before the block. The end of the block is on the 17th. So just be aware of that. This week, we're going to be covering modules 7 and 8. So paying for college and then also different financial institutions. So that's what we're going to go over today. So for the objective is, given quizzes in the OLS, we will accurately answer multiple choice questions about paying for college and different financial institutions with 80% accuracy across one trial. Okay, so as we're looking into paying for college, there are a whole bunch of different financial aid opportunities that you have. One of the biggest ones is called FAFSA. And so those that are, you can apply for that your senior year of high school as you're kind of looking for that. And it will help pay for educational costs. And there's different things you can get. You can get student loans, you can get grants, there's scholarships, there's all different kinds of financial aid that can help you through this process. So first thing we're going to do is we're going to watch a little video about it.
Hi, my name's Ben, and today we are identifying sources of funding to assist in post-high school education opportunities and the cost of repayment. For many applicants and their families, the most daunting aspect of the journey to college is the price tag. If you're wondering, how am I going to pay for college? You have options. In fact, there is more help available to you than you might realize. These resources are eager to work in partnership with you and your family to ensure that a college education is affordable. The federal government. The U.S. Department of Education awards about $150 billion a year to more than 15 million students through federal grants, to federal student loans, and to employment through the Federal Work-Study Program. Your state government. Similar to the federal government, your home state offers various types of financial aid, and guess what? You might be eligible for this type of aid even if you're not eligible for federal aid. College and universities. Many colleges and universities provide financial aid and scholarships from their own funds, sometimes for a particular field of study. To learn if a school offers this type of financial support, visit the financial aid section of their individual website or contact the school's financial aid office. Now that you know who is available to help you pay for college, it's important to understand what you can do to make college more affordable. Start saving. It's never too early to set funds aside to pay for college, and there are specific government-sponsored saving plans to help you do just that. Apply for financial aid. Financial aid comes in many different forms from a variety of different sources. Start by visiting the Office of Federal Student Aid to learn about the different types of financial aid available to you, like grants, loans, and work-study. Then, when you're ready to apply for financial aid, you'll need to complete the free application for federal student aid, or better known as FAFSA. Explore scholarship opportunities. Scholarships are gift money that can help you pay for college. Most scholarships are awarded by individual colleges in recognition of academic performance, athletic ability, a commitment to community service, or other unique talents. You can learn about these opportunities by visiting colleges' admission and financial aid offices or websites. You can also find scholarship opportunities through local, regional, and national nonprofit organizations.
All right, so hopefully that gave you some ideas of all the different things that are out there of how to help you pay for college. So, real quick, what college do you want to go to? Okay. And do you know how you will pay for college yet? So let's have you guys put some things down. What maybe college do you want to go to, and do you want to pay for it yet? Okay, no problem. It's all right to be unsure. Kind of work your way. I did driving a little bit today. I saw on a billboard the new Dixie State University that's changing its name to Utah Tech University. So that was kind of interesting. Also unsure at the moment. Okay. Anyone else? Okay, I'll be going to the University of Utah, and my dad and my brother have put money aside for me and my siblings to go to college. That's fantastic. That's really cool. It's nice that you have some family that will help support in that way. But if it's only half of it, you might have to come up with the other half or whatever. And so that would be something to really look into when you're looking at FAFSA and stuff. Okay, I don't want to get into college, but I am planning to take EMT classes eventually, which I will have to get a job and save for. All right, so just so you're aware, EMT classes, you can still get federal aid to pay for those EMT classes. Very important, okay? So think about it when we go through here of you can get scholarships and you can get that kind of stuff to pay for EMT classes. I don't want to go to college, but if I were going, I'd probably start saving and try to get some scholarships. Fantastic. Okay. UVU, you're going to go for. Awesome. Okay. Hopefully you guys are thinking about these things as just we're kind of moving along. So here's some sources of how people pay. Scholarships, 30%. Grants are 32%. This one comes down here. So grants are basically funds that you actually don't need to pay back. So the federal government puts out so many grants each year. So when I was to go to college, I got married fairly young and we didn't have a lot of money. And so when I applied for these grants, I was able to get a grant that paid for most of my tuition. And then I had other scholarships on top of that paid for other things, okay? Relatives and friends, okay? So that's 5%. 16% student borrowing, which basically means that you take out a student loan in order to pay for it. I would use that as your last resort, though, a student loan. Okay, parent borrowing, and then student saving, income and savings. So working a job and going there. So that is the average, but grants and scholarships are the highest out of all of those. So we already discussed some of these: grants, scholarships, loans, federal work study. So there's different places where you can actually go and get training, like almost on-the-job training through the federal work study program. You can also do internships that will, that was one thing that I did as well in college is I had an internship at the state capitol, and I ran around there and helped different legislators, and I got school credit for it and I got paid for it. And so that was something that helped me through there. Institution waivers, if you actually work for the university that you're going to, some of them give waivers. So when my mom went to college, she worked for the university and they paid for her income, or not her income, but her college courses. Also employment benefits if you work for a company. Sometimes they will pay for your schooling, or when you finish, they will reimburse you for your schooling. And then also veterans benefits. So if your parent is in the military, or if you join the military, there's the GI Bill that will pay for your schooling and education. Okay, so federal student aid. So FAFSA is what it stands for. So federal, I think it's on the next page what it stands for. Maybe not. It's like Federal Application Finance something. Okay. So what you need to know about FAFSA, and this is talking about FAFSA. We'll kind of get into it a little bit. But you must file every year in college that you do it. You can file October 1st of your senior year. So if I have any seniors in here, you can already start applying for it. You need a FAFSA ID, and your parent and student need to do it together, particularly if you're still living at home. Now, if you move away from home and stuff like that, you don't need to do it. The earlier, the better, because there's more funding available for you. The earlier, the better. Okay, so this is what it stands for. I was hoping it was on another page. It stands for Free Application for Federal Student Aid. And you just go to FAFSA.gov, and then you start applying. This is the page that it looks like. So you'll have to start a new FAFSA account, go in, get all of your information in there. It is going to require, if you live at home or have a guardian or whatever, it's going to require them to put into their financial information. And that's what they use a lot to determine how much maybe grant money you get, or scholarship funding that you qualify for. And there's different types of student loans. So I took out a little bit of student loans, mostly what's called Stanford student loans. And what Stanford student loans is, they actually pay for the interest of the loan until 6 months after you graduate from college. So it helps you not have to pay the interest of the loan. So that's really nice. If you do have questions about it, you can always call or go to the college and actually meet with a financial advisor that will help you through that. Okay, so that is, just so you're aware, paying for college. That's module 7. So you'll learn more about this in video 15, 16, and 17, and as you're taking the quizzes. And then we're going to jump now to module 8, which talks about different financial institutions. So let's watch a little video on this.
Hi, I'm Ezra Hainsworth. Today we'll compare the roles of financial institutions and their services. Institutions such as banks, credit unions, insurance companies, loan agencies, and investment or brokerage firms. A financial institution exists to provide a wide variety of financial services. These include widely used services like deposits and withdrawals, lending and collecting, and investment products, as well as highly specialized services like futures trading and financial modeling. While a majority of financial institutions provide a host of services and accounts for the general public, others focus on specialized services that only have a small number of prospective customers. To know which financial institution is most appropriate in serving a specific need, it is important to understand the differences between the types of institutions and the purposes they serve. The major categories of financial institutions include central banks, retail and commercial banks, internet banks, credit unions, savings and loans associations, investment banks, brokerage firms, insurance companies, and mortgage companies. Central banks. A central bank is a financial institution responsible for the oversight and management of all other banks. In the United States, the central bank is the Federal Reserve Bank, also known as the Fed, which is responsible for the conducting monetary policy, supervision, and regulation of financial institutions. Individual customers do not have direct contact with central bank. Instead, large financial institutions work directly with the Fed to provide products and services to the general public. Retail and commercial banks. Traditionally, retail banks offered products to individual consumers, while commercial banks work directly with businesses. Currently, the majority of large banks offer deposit accounts and lending and limited financial advice to both demographics. Products offered at retail and commercial banks include checkings and savings accounts, certificates of deposit or CDs, personal loans, mortgage loans, credit cards, and business banking accounts. Internet banks. One of the newest entries into the financial institution market is the internet bank, which works in a similar fashion to retail banks. Internet banks offer the same products and services as conventional banks, but they do so through online platforms instead of brick and mortar locations. Credit unions. Credit unions serve a specific demographic per their field of membership, such as teachers or members of the military. While products offered resemble retail bank offerings, credit unions are owned by their members and operate for their benefit. Savings and loan associations. Financial institutions that are mutually held and provide no more than 20% of total lending to businesses fall under the category of savings and loan associations. Individual consumers use savings and loan associations for deposit accounts, personal loans, and mortgage lending. Investment banks and companies. Investment banks do not take deposits. Instead, they help individuals, businesses, and government raise capital through the issuing of securities. Investment companies, more commonly known as mutual fund companies, pool funds from individuals and institutions to provide them access to the broader securities market. Brokerage firms. A brokerage firm assists individuals and institutions in buying and selling securities among available investors. Customers of brokerage firms can trade in stocks, bonds, mutual funds, and exchange-traded funds or ETFs, among others. Insurance companies. Financial institutions that help individuals transfer risk of loss are known as insurance companies. Individuals and businesses use insurance companies to protect against financial loss due to death, disability, accidents, property damage, and other misfortunes. Mortgage companies. Financial institutions that originate or fund mortgage loans are mortgage companies. While most mortgage companies serve the individual consumer market, some specialize in lending options for commercial real estate only.
All right, so that was a lot, but I'm going to try to keep it simple a little bit real quick. So we're just going to look at banks versus credit unions. So what I want you to do on here is you're going to get this little drawing section, and you're going to draw on here. Basically, on the one side, what you know a bank does, the difference between a bank and a credit union. So difference between a bank and a credit union. So I'll give you guys a little bit to draw some of that. Okay, let's put see what some of them have put so far. So this person put owned by shareholders. So that's correct. So banks you can actually buy, like it could be owned, it could be publicly traded, like on the stock market, and they're owned by shareholders. So very good. I like that. Somebody has questions. That's good. We'll get into those. Okay, banks hold your money, can be bought. Okay. Very good. Thanks for putting stuff on here. So I think they're putting some for-profit institution. Yeah, actually both are for-profit institutions. But we got to think here that any kind of profit would almost go back to the shareholders in a credit union because they're members. That's why I always said, you know, America First always talks about members, right? Our members, right? You're the ones that basically hold the share in it because you're members. Some other things that you'll want to consider between a bank and a credit union, because they're probably going to be the first institutions that you kind of use, is one is that banks usually charge higher fees rather than credit unions. Credit unions are that. Credit unions are more localized. So like if I go, I'm not going to find America First Credit Union in Europe, but I could find probably a Wells Fargo. Okay. So you got a broader scape of places where you could go in a bank because they're out there more. So they have both are beneficial. Since I usually just do a lot of local stuff, I use a credit union, but I do have some banks that I use as well because if I'm going international, I need access to funds and money. So here's some typical banks that you see and credit unions. So we've got Far West Bank, SunFirst, State Bank of Southern Utah, Zions Bank, Wells Fargo, I feel is like one of the biggest ones. Central Bank, Far West Bank. There's a lot of different institutions that you can do. One of the first things you're probably going to get when you're working with different institutions, and I'm keeping this fairly simple, is you're going to get a checking or savings account. A lot of times, especially in banks, you have monthly fees for checking accounts. Sometimes you can get free checking accounts at credit unions. Minimum daily balances, interest, overdraft protection, ATM fees, internet banking, online bill pay, etc. I love the online bill pay function where I can go on and just have things automatically come out of my account and they send a check to my whoever I owe money to, usually on a mortgage or something like that. Minimum opening balances you have to have. You get interest. So once you put more money in there, they actually give you a little bit of money back. It's not very much. You can write checks, bank and ATM fees, etc. Okay, you guys are going to learn a lot more as you go through the videos and stuff like that, but that's today's lesson. I'll stick around if you guys have any other questions. Thanks, guys.